Welcome to the Wickedly Smart Women podcast, featuring stellar conversations with emerging and established wickedly smart women. Thanks for joining us today as we celebrate women who are committed, care deeply, and have the courage to take action and create conscious change all around the world. Now here's your wickedly smart host, Angel B. Hartwell.
Welcome to another episode of the Wickedly Smart Women podcast, where we celebrate wickedly smart women and provide our listeners with immediately actionable steps and a wealth of wisdom. Steps to be smarter, spunkier, and more successful in their impact and their leadership. This is your host, Angel B. Hartwell, and today we welcome our very special guest, Stephanie Walter. Stephanie is the CEO of Erbe Wealth, a capital raiser, syndicator, and real estate investor. She recently retired and sold her insurance agency of 16 years by following the key principles that she teaches professionals to use. She teaches professional people to unlearn what most of us have been wired to think about money and re-educating people on attaining lasting wealth. She is a gateway between these professionals and well-vetted deals. And one of the things that she mentioned when we were in the green room was Erbe is a German word meaning legacy. So I'm really excited to bring you here to the show today. Stephanie, welcome.
Well, thank you so much for having me.
Yeah, I'm really looking forward to diving into this conversation because I feel like, especially for wickedly smart women, we really need to understand, the basics of money, but also understand that we are in a rapidly shifting landscape. And so getting support, getting help as we evolve as a society, I think is probably the number one most important thing we can do for people. So I'd love to have you start, Stephanie, by sharing a little bit about, maybe your money story. Were you the little girl who had a lemonade stand and you were collecting money, or were you the one that always played the Monopoly game and you were in charge of the bank box? Tell us a little bit about your personal money story.
I have to say that I was definitely influenced by my dad and my mom, but my dad was the entrepreneur. He's actually a second generation German. His father came straight over from Germany and became an entrepreneur shortly after. And my dad was an entrepreneur as well. So I think the gift he gave me as far as money went was probably just being able to watch him create things like create a business and then just work really, really hard to make that business work. And it was a different framework than a lot of people who see their dads go off in the morning and, come home, work 9 to 5, have the 2 weeks of vacation a year and sort of work like that. I was able to watch my dad work on things that made him passionate, that, fulfilled him. And I think that was huge for me. I worked, actually, I did have a W-2 job and realized 8 years into it that, the 2% raises just weren't going to cut it. And I remember talking to my dad and just saying, man, if this is it for me, there's something that's missing, to be dependent on, and I'm not saying anything bad necessarily, but for me, I felt a little unfulfilled in the job that I was in. And he said, well, you can keep working there. You already know what is going to happen. You know what to expect there. Or you can go out on your own and you can really depend on yourself to make your life what you want it to be. And so I quit shortly thereafter and started an insurance agency. And that's when, that was in my early 30s. And I really had to become, my whole life, changed when you become a business owner, and just your, ideas of money and all of that changes.
It certainly does.
Yeah. but at the same time, I still did invest in single family real estate because I always loved real estate. It always seemed to make sense to me. So that's what I invested in. And then in about 2016, I was invited to a boot camp that was going to talk about buying apartments. And that's when I first heard the word syndication. And I was 45 years old. My goal at that point was I was going to sit on my rentals and just kind of wait the 30 years for them to be paid off and then live off the rental income. That was what I had planned. And after that boot camp, it just drastically changed me. I thought that it was like the heavens opened up and I finally understood, what I needed to do with my life. And I have been doing it ever since, which is putting together these deals where basically a pool of people invest together and they buy something larger than anyone can do on their own. And in the process of working with a lot of investors, I changed my mindset of my money and was able to retire this year, sold my agency in July of 2021.
Congratulations, Stephanie. All right. Well, beautiful. So there's a few little pieces I'd like to unpack in there for our listeners. So if you're willing, I'd love to have you go back because, I know that our listeners here at Wickedly Smart Women, some of them are perhaps still in their profession and possibly contemplating quitting the corner office, like I like to say. And especially after the last 2 years of Corona, where people have had the opportunity to actually realize that they don't have to go into an office necessarily to get the job done. So I'd love to have you, if you wouldn't mind for a moment, to just go back to where you were when you made the decision to leave the kind of corporate structure. And besides your encouragement from your dad, would you say there was anything else that you needed to do or know or feel that allowed you to make that decision, that initial first decision to get into your own business?
I think I'm a big mindset person, but I've always had a pretty positive, optimistic attitude. And I felt like I've always felt this way. I don't know, if it's true or not, but I've always felt, what, things are going to work themselves out. Things will work themselves out. And they always have. But at the time that I quit, I was single. So maybe for someone married or whatever with more responsibilities, there would be some more consideration there. But for me, I just felt like if I went out and just followed my dream and worked really hard, I would make it work. And if I failed, then I'd just go back to doing what I was doing. I could go back to this job and continue doing that. But if I didn't go out and try it, I felt like that to me was the driving force to get me out because there really wasn't much to lose.
Yeah. I remember for me, when I actually spent 20 years in the real estate industry, and my last project was 2 partners with 51 single family houses, 56 apartments in an office building. Wow. And I was managing about $100 million in assets before we ended up in that project. And then when I made the decision for me, so my experience was I knew I was going to die if I stayed another minute. So it was definitely I'm jumping off the ledge. I'm never looking back kind of situation for me.
And it is. It's like jumping off the ledge. Yeah. It is. And once you do it, you've done it.
Yeah. Well, yeah. And once you do it, you know that you can do it again, which is probably why it was, it was something that allowed you to shift your mindset and retire yourself from your insurance agency. So let's talk about what happened then. Like what was the mindset shift? Can you pinpoint the mindset shift or what you needed to do to know that it was actually time to exit your entrepreneurial venture, your insurance agency?
Yeah. I mean, I'd had frustrations, along the way. You're an insurance agent. I was a captive agent for a large company, that just meant that I could only sell for them and no one else. I felt like there was a lot that wasn't in my control. So although people liked me, I couldn't control the rates at the end of the day. I couldn't control the claims. And as this business kind of started out as a family, it slowly and slowly over time became more and more corporate, and less control I had of my own business. So that was kind of in the back of my mind. And so when I learned about this other, I wasn't really sure that I would ever really retire out of my business. It just happened very quickly when I changed my mindset. So it did actually surprise me. A lot of times I have to go back and be like, it was only okay. That wasn't very long at all.
Yeah. Well, one of the key words that you did say there is, at the end of the day, everything is down to selling, right? So, what are you selling? How are you selling it? How are you getting compensated for the selling of it? And in your case, you actually sold your agency when you made the decision to go off in this new direction. So we are going to take a short break, but when we come back, I want to talk a little bit about where you are now, how you help people now, and maybe, wrap up with the bow a little bit about the experience of selling your business, because not a whole lot of people who might be listening are at that stage. I'm sure there's people who are in the corner office thinking about starting a business, but not a whole lot of people actually think about selling something. And so when we come back, we'll talk a little bit more about that. But right now, Wickedly Smart Women, we could use some help. If you are enjoying our show and want us to stay on the air, please consider making a donation at www.wickedlysmartwomen.com. We are also celebrating. We've won 4 awards. We just got the 4th award in the mail the other day from the W3 Awards. So we won 4 awards this year, or actually 3 this year and 1 last year. And I just found out also that on the Good Pods app, and if you aren't on the Good Pods app, you might want to consider getting on the Good Pods app, that the show is number 4 in the top 100 indie marketing chart, number 6 in the top 100 marketing chart, and number 8 in the top 100 indie entrepreneurship chart. So we are celebrating all kinds of charting and awarding and all kinds of other things that are happening right now here at the show. And I want to thank all of our amazing Wickedly Smart Women guests, without whom that would not ever be possible, as well as my team on the back end. And I also want to thank all of our listeners, of course, who are downloading, rating, and reviewing from all around the world. We are now up to 94 countries as of last week, and we're welcoming thousands and thousands of downloads. I want to shout out this week to our listeners in Germany. We might as well say hi to the listeners in Germany. And let's see, why don't we just stay in Europe? Germany, France, and Spain. And we will be right back with Stephanie Walter.
The Wickedly Smart Women podcast is brought to you by the Wealthy Life Mentor. Women, are you on the edge knowing that life is calling you to make a change? Are you ready to be part of the evolution of what it means to be a wickedly smart woman, creating your wealthy life by design? A life that is an extraordinary work of art. Angel B. Hartwell, the Wealthy Life Mentor, is hired by women in transition. Women just like you who want to break through to their brilliance, become clear on the value of their wisdom, and embody a beauty-filled, balanced life of shameless self-expression. Discover your wealthy life readiness by taking the quiz at quiz.wealthylifementor.com.
And we are back with Stephanie Walter. And before we went to the break, we were talking a little bit about her entrepreneurial journey. I want to let everyone know where they can find out more about Stephanie and what she's doing now, which is syndicating deals and raising capital and helping people invest in real estate. So you can find out more about Stephanie at erbewealth.com. erbewealth.com. And that is spelled ERBEWEALTH.com. We will have more about that for you in the show notes. And remember, Erbe is the German word for legacy. So let's talk about that, Stephanie. You are definitely an accomplished woman and a brave woman and a wickedly smart woman and a courageous woman. You've left corporate, you started your own business, you sold your business, and now you have a new, I don't know, do you call this a hobby now because you're officially retired, or are you in your second career wind here, or second entrepreneurial wind?
Correct. Yeah. I have, I don't think I'm still kind of trying to wrap my mind around that, but I just, I love what I do. And so I work now because I love it. So it's probably the first time in my life that I feel that strongly about something.
And you found the fit. Yeah. So let's talk for our listeners who don't know at all what we're talking about here. Let's talk in baby bird bites, like kindergartner language, for those who are not familiar with how you can actually become wealthy by getting involved in syndicating and real estate deals.
Sure. Yeah. No, I mean, the syndication is just it's been around for centuries, to be honest. And it's been largely for the very upper crust, wealthy people that have banded together, pulled their money together to buy an asset that's managed by a professional who manages the commercial property and then runs it and then sells it. So what happened significantly just a few years ago in 2012 is there was the Jobs Act that was a bipartisan piece of legislation that was passed. And what it had a lot of different features in it, but the part that was interesting was it deregulated small businesses and let them get funding from different sources. So what that did in my industry was that prior to that time, I could not go out and talk to someone about an investment opportunity I had unless I had a prior relationship with them. And I would have to have that documented well. So that really just lent itself to people being in a country club, passing these tips back and forth. So the wealthy to stay very wealthy. With the change in 2012, that allowed us to market our deals, email to mass people, advertise. So this is relatively new for the average investor. But what it is we find a property. For us, it's a multifamily apartment complex. We get 75 to 80% of the loan, and then we raise the additional 20 to 25% from our investors. So our investors that come in are considered passive investors, truly passive. They have no responsibilities at all, except for collecting their check, which we issue every month, a cash flow check when we own the property. Our goal is we find a property in a great area, or there's many, many different aspects of finding a property where you can add value to it. And we run it and then we sell it in 3 to 5 years. And I'm on my 8th syndication with my partner, and we have consistently returned over 20% annualized returns. So that's not 20% for 5 years, that's 20% each year. Why it's so powerful is, one, cash flow. You're given cash flow from day one. It's an incredibly stable asset class. I tell people, my investors that are new to this, is please just check everything I'm telling you on the internet. But multifamily is where a lot of insurance companies and pension funds put their money because they know it's a stable asset class, relatively recession proof, which we've seen through COVID and in the last recession.
Yeah, one of my 2 partners in the project that we did basically lived off of his multifamilies that he had built and managed. So, one thing I know about real estate is people are always going to need a place to live.
Correct.
And that's what makes it so stable. So what I'd like to ask you now is, when you talk about some key principles that you teach and teaching people to unlearn what they've been wired to think about money, if you could give us just a little bit of that, a little taste of that today, that would be awesome. Like, what's maybe one thing that people have in their mindset about money that are in the professional space? I'm guessing, when you're talking about professional people, you're probably talking about people in middle to upper management or in the C-suite who probably are sitting with a 401k and, maybe a residential piece of property that they're either have equity in or maybe own outright. So why don't you talk a little bit about some of the mindset that they might be in that's actually keeping them from 20% a year in return?
Yeah, no, that's a great question. And I could talk about it forever, but I'll keep it simple. The first, and I think mindset is key to all of this, but the mindset that we are all taught, actually, and that we all need to break, is that we're taught an accumulation mindset. Okay, that's what I was doing with my rental properties. I bought them and I was just going to sit and let them accumulate for me, and then in 30 years I was going to take the money. But for the majority of people, that is their 401k. Just, we're going to put money in there. We don't expect anything really to come out of it. We're going to just set it there for 30 years. And then we don't know what it's being invested in. We have very little, if no, control over, what the stock market is going to do as far as the volatility. But we look at it as a nest egg, just it's going to be there. What the wealthy, they think very differently about money, and the mindset they have is utilization, and they use their money. And so they know what their money, they largely invest in these syndicated deals. They invest in businesses. They invest a little bit in the stock market, but they want to understand, the fee structure they're paying, the tax ramifications, and also is their cash flow, because that's the second thing is, are your investments producing a cash flow? That's a hugely, because that really gets everybody out of their golden handcuffs, is, what I call it, is, not being strapped to your work. If you can have cash flow coming in, that gives you the opportunity to do, something that you love. There's a lot more to it than that, but I think that is the biggest mindset change that you have to overcome, is that you need to get into your money a little bit and understand how it's being invested, and look at these different alternate options, because it is a great time in our history for you to be more in control of your money. And yeah.
Beautiful. I want to ask a very specific question, and I'd love to have you, like, one of the things that you said is you raise 20% from investors. So if you could give me a little bit more detail, let's just pick a deal out of your head that you've done. Like, how many people are you syndicating? How much money approximately are you, raising from your investors? How much time to cash flow? Just a few of those little details I think are going to be really helpful too.
Well, I'll talk about the one that we're doing right now, and it's 160 units. It's $18 million in Tallahassee, Florida. It's our third property that we've acquired there. So we're actually raising a little bit more than what we need to raise to close the loan, because our business plan, which, if you're looking to invest in these types of deals, two things: you need to know the track record of who you're working with, and you need to know the business plan and the exit strategy. So for this property, we're planning to hold the property for 3 to 5 years to execute our business plan, which is doing small renovations and getting this property basically up to market rent and getting it running efficiently, just like a business. So we're raising $6 million from our investors for, closing the loan, and also having some money to start some renovations in the property. So each investor, we I know we say 100,000 per investor, but I have in this deal, some investors that are coming in with $50,000 a year. So when they invest that initial amount, it takes us 3 months to stabilize the property. And then after those 3 months, that's when the cash flow starts coming in, and that gets paid monthly. And that's paid monthly until we achieve our goal that we can attain within the 3 to 5 years. And that is doubling our investors' money. That's the goal we go into all of our properties with. At that time, really depends on so how many people, I think was a question.
Yeah.
So for this one, probably about 40 people will be in it. So it's not a huge group of people. It's very personalized. People, I think, really love it because they're able to call me. I just talked to an investor today. I said, any problems on our portal, navigating, call me on my cell phone. I pick it up all the time. So, they have a connection with a person with great customer service, because this is our business, is having investors. And we wouldn't stay in business if we didn't make our investors happy, because they need to invest with us again and again.
Exactly. All right. Well, we are down to our last minute, Stephanie. So thank you so much for being willing to go even deeper into the details there. I am really grateful that you are in the world doing the wonderful work that you're doing. And I'm going to definitely encourage our wickedly smart women to go check out erbewealth.com. Again, we'll have that for you in the show notes. And like anything, you definitely want to do your research. As Stephanie mentioned, go ahead and look on the web and see about stable asset classes, and you'll see why multifamily investing in a syndicate may make some sense for you. Anyway, I want to say thank you again to you, Stephanie, for being here. And listeners, we do love feedback. Please do let us know what you thought of today's show by calling into our listener line. We'll have that for you in the show notes, or you can send in questions or guest suggestions to listeners at wickedlysmartwomen.com. We might even give you a shout out on the show. Thanks for tuning in. Keep your ears open. And remember, you are a wonderful woman.
Thanks for tuning in, downloading, and listening. Be sure to rate and review Wickedly Smart Women on Apple Podcasts and share with other women who can benefit from today's episode. Wickedly Smart Women is the premier podcast series for informing, activating, and inspiring the leader who carries profound wisdom and knows that now is the time to welcome wealth. We welcome your feedback and guest suggestions and invite you to subscribe to our mailing list to be notified of each new episode at wickedlysmartwomen.com.